2 days here in Geneva with 500 senior executives from the asset management industry around the world. The key message here is that change is happening, and it's happening more rapidly than it's ever happened in the past. It's driven by technology, and most importantly, it's driven by investors' demands, by investors' expectations, but actually by the sheer size of the industry.
I think you've got to be optimistic for two reasons. First, the pie will grow, meaning people live longer, so they will have to save more to finance this 25 to 30 years they will live after retirement. And the second point is that the asset management is going into new venture. We talk on the panel about the funding the real economy, about lending. So this will also grow the pie of the asset management industry.
Very optimistic about the important role that our industry is going to play in the years and decades to come. You know, private markets are an increasingly important element of the asset class, or the asset allocation of institutional investors, and I believe we are an important ingredient because private markets is allowed and actually mandated to invest for the long term. So it's about value creation, and it's about creating positive lasting impact.
When we came out with the report in 2014, we had estimated that the market will be at around about 101 trillion USD by 2020. Now, given in the past years that we have seen such a strong growth, we have come up with our new report, which is called Asset Management Revolution, and within that we have also updated our numbers, and we now believe that the asset management industry will increase from 2016 at 84.9 trillion US dollars by 7% compounded annual growth rate to 2020 to reach 111.2 trillion US dollars.
Digitalization on distribution, which is more today about the actual enabling and changing and digitalizing the internal processes of the industry, rendering more efficiency to the processes, which comes to the actual pressure that we see on margins and fees. We have also changed in the product shelf, the way products are designed. We see quite disruptive elements in the industry, like changes in fee models and the way products are used in terms of building blocks for that distribution. So it's about push and pull strategies that we observe. And so the third trend is about MiFID II and the way regulation impacts the industry.
We were talking about specific Western European issues around MiFID and AIFMD and other regulatory changes that have put significant pressure on pricing and distribution channels, along with other issues such as governance. It's interesting to notice how many similarities there are between Western Europe and the United States in terms of these identical challenges and issues. And we're at a point that it's going to take a while more for these issues to sort themselves out before we're able to determine how much of what is going on is truly going to benefit the investor.
Our industry is going through a fast pace of change. It remains a growth industry. All we need to do is ensure that we continue to deliver value to our clients and show the change leadership in this fast change time.
How to use technology in organization for creation of value, for a better world, for customers, etc. And I think people may have overemphasized the technological side of things, which is going to happen, but there's so many different technologies that the real challenge is how to use technology to actually shape a different organization, to actually shape a different strategy.
There are huge opportunities in this industry. We think if managers focus on the investors and what they're demanding, if they focus on technology improvements, there are huge opportunities that they can capitalize on.
We'll see you next year and travel safely.
Thank you, James. We predict the industry is going to reach 145 trillion US dollars by 2025, with more people than ever investing and saving for their future and for their families. That creates great opportunity for the industry to do more around new assets, real estate, infrastructure, alternative credit. but also to be wise custodians of that business and to ensure that the responsibilities that our investors demand of us are met in a full way.